This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, MICHAEL COVEL. Not filtered, raw, honest. That's my passion. So if I hear this story, short-term trader only, S&P only, and his first boss was Monroe Trout, and I don't get a chance to interview Monroe Trout right now, would you not want to know his background? Would you not want to know his experience? The guy that was trained by Monroe Trout? Well, I do. My guest today is Eric Dugan. He is the portfolio manager for 3D Capital Management. And yes, he does not do trend following as in my world exactly. He is the short-term guy. He is the one market guy. And what an interesting tale of serendipity and sticking with it. I hope you enjoy this conversation with Eric Dugan. Eric, take me back in time. You happen to have had, early in your career and into your career, a very interesting experience. This interesting experience happens to be that you had a chance to have a mentor or two, we're going to get into, but that first mentor, a very tall guy who happens to have been made famous in a book called, I believe it was The New Market Wizards, the second one, but just one of these names that were people here, they're like, oh my gosh. And he's probably like one of the most mysterious traders, because he's not in, I don't think he's in the business, at least in a public way, but this would be Monroe Trout. And you had a chance very early in your career to be hired on. And I would love for you, I'm going to go back earlier in your life and career too, but I'd like to start with Monroe Trout. This was responding a friend recommendation for an execution desk. How did this originally happen? And give me first impressions. And did you know exactly who this guy was when you met him?
No, I didn't know who it was. Even while I was there, I had no idea what I was getting myself into. I know I loved it, but I'll back up to my first visit to Chicago in December of '92. A friend of mine in high school said, Eric, you've worked odd hours and long hours your entire life, 12, 14, 16-hour days, working construction. It didn't matter what it was. I did what I had to do to make money, and it didn't matter what time of day it was. And my best friend in high school at the time went out and joined Monroe Trout in Chicago. And he reached out to me and said, I know you like to work those long, weird hours. We have a position trading the Pacific Rim markets in Chicago. Would you be interested? I knew he loved what he did. He was making good money doing it. I said, sure, I'll give it a chance. I'll give it a shot. So I went out in December of '92 and interviewed, and was probably about 2 or 3 weeks later, started trading the Pacific Rim markets in January of '93.
Did you have any Wall Street experience at that moment in time?
I had no experience at the time. I will tell you, back in college, a friend of mine came to me over the summer. And again, he knew I worked long hours and I was making decent money. And he said, Eric, I've got this live cattle spread that I want to do. Can you loan me 10 grand? And I'll give you back 11 at the end of the summer. I said, that seems like a pretty good return on my money. Okay, here's 10 grand. 2 months later, he gave me back 11 grand. So that was really my only experience is, wow, you can make some good money in the markets if you know what you're doing. So that was the extent of my experience before starting trading for Monroe.
No, I don't recall at that moment in time, 1992, how big his firm would have been in terms of staff. I assume he had to give you the imprimatur. At some point in time, he sized you up, and he has a good size himself, which you might want to comment on. But I assume he sized you up and decided over an interview that you were going to work.
When I went out there, I was the third person on the desk in the Pacific Rim. When you talk about size, maybe you're talking about height, because Monroe is 7 feet, and I like to round up and say I'm 6 feet, but I'm really about 5'10". He probably sized me up in more than one way or the other. But yeah, I think it was more of a personality thing with Monroe. Because we were systematic traders, there was no preconceived notion of what you were going to do. It was just do as the system told you to. So if you were able to do that and you didn't have experience, I think it was probably a prerequisite for being hired on the desk. So that was definitely part of the common thread that ran throughout the firm when I was there in Chicago and then in Bermuda.
Was there anything in the initial experience, the initial interview, the initial coming into the office, something that I know there was other experiences, I'm going to bring those up over time, will bring you up to current day too, but was there something very early on that still sticks with you, a first impression, something, or when did you know exactly who you were dealing with?
I don't really think it sunk in until maybe the 2000s, as far as who I was with and where I learned from and who was my mentor, because you look back and you look what Monroe was able to accomplish. It's pretty spectacular compared to the industry as well. I mean, he's known as a legend. The only thing that really sticks out is everybody was having fun. It was such a great environment. It was almost like this fraternal environment where everybody was competitive, everybody had each other's back. It was one for all and all for one. It was definitely a team environment. And if you were a member of that team, it was terrific.
How long were you with trout trading?
I was there from 93 to 99. So when I joined in 93, I was a junior called execution trader. I'd never placed a trade in my life, but when you joined trout in those days, it was, literally throw you in the lake and learn how to swim. So within a year, we were moved out to Bermuda, and I was named the Pacific Rim session manager. We called it the Asian session manager at that time. I was responsible for all of the trading decisions and the traders from roughly about 5 p.m. to 3 a.m. Central Standard Time. I was in the fast lane, so to speak, and as far as learning and really loving what I was doing.
It is one of those serendipity type moments, huh? To just kind of keep your eyes wide open, keep pushing ahead, and then all of a sudden opportunity happens. You have to pounce. You really can't sit around and say, I don't know, maybe this won't work out. I shouldn't really try. That kind of attitude doesn't work much in life, does it?
No, it does not. I was raised by a Marine. The discipline with which anything in life that you do, personal or professional, is, as far as I'm concerned, the job, the reward of a thing well done is to have done it. So it's always give your all, always try to add value. In doing that, good things happen. People say you're lucky or you're not lucky. You make your own luck. You have to put yourself into that position. As long as you give 110%, good things can happen. I always tried to add value when I was with Monroe. I spoke with him every night, made trading recommendations, tweaked the systems. I was actually the only trader given discretion with Monroe, which, as you know, as a systematic trader is a big deal. It was nice to be acknowledged in that regard, and it made me hungrier for more. Every trader in the trade room had responsibility for trading a certain number of contracts. At the time, I was trading JGBs and dollar yen and Nikkei. If the systems generated a signal, I had discretion within the system to add to the positions. So if there was a strength of signal that I liked, for the lack of a better word, I was able to put on more size.
What was your process to analyze that particular situation to know, okay, the strength is at XYZ, I now have the discretion to take on this extra position?
Let's say in JGB, there's a trend to the upside tonight. We're short bonds and bobbles at the time, the notional French nosh, bonds, 10 years, we're short the world, and the other two profit centers, we call them. So I was trading JGB and Nikkei and dollar yen. In terms of discretion, if the JGB was beginning to rally and the portfolio was short interest rates in Europe and in the US, as long as the systems in the JGB were saying the strength of signal was X, I had the ability to add to the position by, say, 20 or 25%. So if the maximum position size in the JGB was 400 contracts, I had the ability, if we were currently at 300 contracts, to look around the world and go from like 300 contracts to 350 contracts. That's a very broad base of what I was able to do. But it was always, Monroe was always like, whatever you do, Eric, it has to be an educated decision. He didn't care if it was the wrong decision, but it had to be an educated decision. In building systems today, that always sticks with me. Whatever you do, it's got to be logical. It's got to be statistically significant and make sense.
Speaking of systems, back in the day with Monroe or today with you now, what type of inputs are you using? I know right now, I think I've read 20 different markets to generate your S&P signals today, but speak to what would be the foundational triggers for your system. So let's start with back in Monroe time. I mean, are we talking price action alone, or was there fundamental data that was driving signals?
The only thing that really matters in the markets, as I know you know, is price and time. So it was a combination of price and time. That's all you have. We're reacting to prices over time. And back in those days, it was more of the market's going to tell you what it's going to do. If the JGB is going to rally or the Nikkei is going to sell off, let the market tell you it's going to do that, and we would leg into a position or out.
Do you think you had an advantage that when you started, you didn't know what a system was, right? You didn't have any experience in any of this. So you didn't necessarily, I'm guessing, have a tremendous number of University of Chicago, all kinds of academic stuff, bad habits to break. I mean, you walk into a situation, you're at Trout Trading, they say, hey, this is what we do systems. Here is how our systems work. Do you think that was an advantage for you, that you did not have all kinds of habits to unlearn?
There's no question. I mean, there's so much information out there these days. I couldn't imagine being a discretionary trader. Learning from the best is a good way to start, and just not having to do anything other than generate the signals of a system with no preconceived notions. We used to joke, you want to start your feeling fund, go somewhere else. We're all about following the rules here. And again, which was something, again, that I learned from a very early age. Is just do as you're told, speak when spoken to, follow the rules of the system, and everything will be fine. And that may seem very easy. I always like to say the easy part is developing a system. The difficult part for most people is following the system, because emotions get involved. I'm a very emotional guy, but when it comes to trading a system removes an element of that emotion. That doesn't mean I don't get upset or excited when the system starts going on a profitable run, but certainly not having any experience in the beginning was an added bonus.
I'm going to jump you around a little bit because I've just got something that's just saw actually today, was a recent clip with you on Bloomberg. Very attractive lady. You guys are both standing there in the studio looking good. She's looking sharp. Nice conversation, big charts on the walls. And you were giving the same kind of presentation that you're giving me right now. Very pragmatic, the price action. And it was interesting that I don't know if she did not understand exactly what you do, or she did and it didn't matter because she still had to ask the questions that would possibly position you as some guy who's got a crystal ball in his pocket. It just strikes me funny. Like, it's like, you know what I'm saying? It's a really, I was watching you almost in the clip thinking, I think that's what he's thinking. Like, do you not get what I do? Or are you just asking questions or just getting to get like people to watch more or something?
It's funny because I had a couple of friends and investors say the same thing. She kept asking the same question in a different way, trying to get me to answer the question. We had some success in early October I was on. Because of certain relationships, it was easier for me to say, be prepared for a sell-off in October because of correlations and what markets were doing. And the same thing at the end of December and early January as far as where the market was going. But we don't have a crystal ball. And what we do have is rules which identify patterns and statistically significant relationships among Asia, Europe, and the US. So on a daily basis, we're able to identify weakness, and that's why we exist, and strength. But she asked a couple times what I thought was going to happen from here.
People can go watch the clip and they can see what your answer. It was kind of one of those things like, okay, you can keep asking it, but I can't give you the magic answer. Here's a great line that I love that is, I think it's actually it's on your website, on your email. 3D Capital believes the world is one big global macro and dynamic flowchart, and managing the risk daily enables us to adapt to the daily narrative of the market, one trade and day at a time. Now, it would have been great as if you just would have stopped your presentation on Bloomberg and just recited that from memory. And then the look on her face would have been like, okay, listen, Eric, we really don't want to have you back anymore. I'm sorry, but you're a nice guy, but come on.
I'll have to, Michael, I'll take that in mind next time I'm on. I wonder if that will be my last appearance when I do that. But that is very true, because I went back and I watched it. She had earlier in the segment, she said something about the crude move being, a 1-day move, is not a trend or something along, a trend is not a 1-day move. And I was saying to myself, that's actually what I've been doing for 25 years. Right?
You are a 1-day guy.
I'm a 1-day guy. You can't get to 5 or 10 or 20 or 50 days without passing 1 day. And markets, Monroe said to me, and Monroe spoke, he was very tall, very deep voice, Eric, how do you make money in the market? And I said, well, Monroe, you buy low, you sell high. And he's like, no, you buy high and you sell higher. That's how trends happen. So that's what we do on a daily basis.
Let me take you back to something that you mentioned. Like I said, I'm going to jump you around. Your father, a Marine. What's that like when you're 12 years old?
Oh, wow. You just put a shiver through my body. Well, at 12 years old, I don't think I really appreciated it. Could probably take you back till I maybe was 6 or 8 years old. He would take me upstate New York. He's got a house upstate New York, and we would go up there for the weekends. And he would literally, from what I remember, make me dig holes and fill them in. It was just all about working and understanding the
Hold on. Let me stop for a sec. Upstate New York.
Yeah.
Digging holes and filling them in. What is this, like a scene out of Goodfellas?
Yeah, we have a 100-year-old home that had these Bilko doors into the basement, and we never used them. So I had to go into the basement on the inside and dig, and then go on the outside and fill it in. It was, and again, that's just one example. But the one thing that I'll never forget is I was probably in 6th grade. And my father, I was responsible for mowing the lawn and shoveling the driveway. And he said, when I get home, I want the front walkway, Eric. I want you to shovel that. And I did not. And he came home and it was covered in ice. He came in and he said, Eric, I told you to get that done before I got home. I said, I didn't get around to it. He made me go outside, Michael, with literally like a hammer and a screwdriver and knock that ice off that front path until it was all gone, and Mom was in the background, let him in. No, he's got to learn the hard way. Do what's hard and life will be easy. Do what's easy and life will be hard. So that kind of really stuck with me and has driven me to do my best and just do it right the first time. And that's stuck with me now for, 40, 50 years.
It's always nice to kind of hear the stories. I'm sure there's plenty of people that could probably have a very similar perspective to you and maybe did not have a father who was a Marine, but we all go through some kind of interesting path. And it's just a matter of where do we keep progressing to, regardless of where we start. Because it's kind of like the price action. You can start on day 1, day 2, day 3. It's each day you have to adjust.
Yeah, exactly. And that's why for us, it's easier to adjust on a daily basis. You're able to control the risk more. And when you say adjust, and I hear you, in my mind, I hear adapt. So our motto is adapt, evolve, compete, or die. And that's what we do, again, professionally and personally. And that's what our systems do. We've had to adapt over time. We're a money management firm that exists to protect the stock market investor. After all, if you think about it, that's what hedge funds, the word it says itself, hedge funds are meant to do. Manage futures, if you looked at the Investopedia definition, exists to generate returns that you cannot typically do using stocks and bonds, which is ironic because all we trade is the E-mini S&P futures, and we generate positive returns with a negative correlation to the S&P. And we do that because we do it 1 day at a time and because we adapt to the daily narrative of the market.
The daily narrative of the market, though, it's more than just one market you're using to generate those signals on the S&P. As I mentioned earlier, you're looking at 20 different markets to gauge your E-mini entry and exits, correct?
Correct. A lot of people may say, you trade one market, you're not diversified. I would say, well, we do trade one market, but it's arguably the most important market in the world, with over 20 trillion in it, and it's the biggest portion of everybody's portfolio. When we say we're diversified, maybe not in the market we're trading, but if you look at what's going into what makes the world move, you look at Nikkei, you look at JGB, you look at the Euro stocks, you look at the Bund, you look at the 10-year note, you look at London gas oil, gold, copper, crude, Euro yen, all of those markets. And Mike, you've been doing this just as long as I have. The world is more connected now than ever. I mean, so even if you looked at like headlines, whether it's a bank in Greece going under or Turkey or, a tsunami in Japan, anything that's going on, the Brexit, China, everything is connected. For us, understanding that and being able to be nimble and adjusting to what's going on around the world has, enabled us to be successful.
I love having you on for one big reason is sometimes I get critics. I don't really know if I should call them critics, but I get crazy people sometimes that think that I'm so hardened and so stuck in the mud that I can't possibly talk to anybody or appreciate that anybody else can have a strategy other than trend following. And I always think to myself, well, God, okay, I get it. I wrote some books on trend following, but the track record with this podcast is to bring all kinds of voices on. For example, Toby Crable has been on. I might even guess that somewhere you've had a chance to talk with Toby, but Toby's the last thing you would call a trend following trader.
Yeah, that's interesting. I wonder why that is, because I'm looking at his book right now, Day Trading with Short-Term Price Patterns. It's a trend can be a day, it can be an hour, it could be a week, 2 weeks, 4 weeks. I would consider, one of our programs to be it's a daily trend following program. We have a defensive short bias program. The only way you can, especially on a daily basis, Michael, is you have to be able to identify a trend on a daily basis to have success. We have a short bias program that identifies weakness, and the only way you can have success managing short exposure in the market is being able to identify strength. So that was the natural progression of the evolution, the whole adaptive off compete or die mindset of 3D Capital. We actually started with a program back in 2008, but evolved over time. I think that you can actually identify and label us a trend follower. Maybe it's a different trend follower. I don't think trend following can be thrown into one category as, the trend following wizards index and all those managers that are in that index. They have their way of trend following and we have our way of trend following. And I think that they can all work well together.
I think the only reason that I might try and differentiate the two is that there's probably far less of you.
I agree with that. In fact, I just saw something online about the blue ocean strategy. There's red oceans and blue oceans. There's something, the red ocean is, all the competition, everybody's beating each other up. It's a bloody ocean. And then there's a blue ocean where there's no competition and no one there. I don't know if that's where we are, but we certainly are doing something, I think, that's different than the longer term or medium term trend followers. So I'd like to say thank you. I don't think anybody else is doing it. And it's been very rewarding to be able to have the success we've had just trading one market.
But you are not high frequency. You're not something at light speed, right?
No. We're probably, our average hold, Michael, is probably somewhere around 5 hours. I can give you some more insight to what we do, is that we use price and time for entry, and we use time for exit unless we are getting stopped out. Going back to Monroe, right? It's all about risk control, limiting your downside with unlimited profits. We let our winners win and we cut our losses. So on a daily basis, if we identify a trend, we get in and we have a trailing scaling stop, but our exit is time-based. So what does that enable you to do? That enables you to let your winners win. We're typically out on the close every single day. So whether it's October 3rd, October 10th, and the markets, or December 24th, this is last year, or December 26th. When the market rallied 4 or 5%, that enables us to capture, these, we'll call them exacerbated moves to the upside or downside. You start getting capitulation, we don't have price targets. We have time targets. The best is to get out on the close because that means you likely had a profitable trade.
Why have you not gone down the path of taking your time horizon to a tinier and tinier scale? Why have you not gone the speed of light trading?
Learning from the best and knowing where I can add value and where the firm can add value. Again, the biggest problem probably in the investment world is that you are guaranteed a loss when the stock market goes down. Being that everybody's largest risk in their portfolio is likely the stock market, and we know the stock market goes up 2/3 of the time and goes down about 1/3 of the time. If we can identify weakness and profit from weakness in the stock market, there lies what some of our investors call the golden egg. That when the people look at our track record, they say, wow, I didn't even know that was possible. And that's all we've done. So the specialty of just identifying weakness, and again, which enables, and the only way we can do that is to identify strength too. But if we can do that, we can solve a problem. Everybody has the same problem. For that reason, and the success we've had, I've been so focused on just being able to add value in the stock market, because I believe that's the biggest problem we have.
I'm going to go back to that point in a second, but one thing I would love you to expand on, got this S&P bull. I mean, there's been some downside moves, but for the last 10 years almost, you've found ways to actually short this S&P bull and make money over the last 10 years.
Thank you for acknowledging that. It's been a grind, as you can imagine, with the lack of volatility. But in 2008, I said, I've identified the problem. I know what the solution is. So I went and bought the S&P. I went and bought the E-mini S&P, and I just did what everybody else does, the buy and hold, or as our managing director, Tom O'Donnell, says, the buy and hope. I'm just going to buy the S&P, and whenever our systems generate a sell signal, I'm going to get out of that long position. 2008 long only, what a perfect opportunity to show proof of concept. In 2008, our long only program was up 3. And I was like, this is fantastic. This is doing exactly what it's supposed to do. I started taking it to some of the brokers and the sell side. And I'm like, so what do you think of this? And they said, yeah, Eric, first of all, it's unbelievable. Congratulations, but we're already long. If you can get short, that would be better. So in 2011, the Defender program was launched. So now it's been 8 years, fast forward, and to your point, over the last 8 years, from 2011 to today, what is that, 96 months, the S&P has rallied about 100%. But as I know you know, and your listeners likely know, markets move in two directions. So I'm going to ask this question, you probably know, because I think Tom probably sent something to you, but how many down months in the S&P have there been from 2011 to today, knowing that we've just went through one of the longest and strongest bull markets in history?
Oh, you don't think I'm going to actually try and spit a number out? I'm going to let you tell me.
Most people say 5, 10. There's some outliers that go higher. There's actually been 32 down months in the last 8 years, which is opportunity to add value. And during that time frame, our systems, our Defender program has been profitable, over 70% of the time, and outperform the S&P over 90% of the time. So that's the value add. The markets, you may think, because you look at from the 10,000 foot level, the market just goes straight up. It never goes down. Well, in actuality, it did go down 1/3 of the time, which is consistent with the market's history. And that's where we are the value add.
I mentioned earlier in this conversation that you had more than one mentor. And I want to let you share the story of going to work at Willowbridge. I will share something. I don't know much about Willowbridge. I don't know where they stand today. But I do know that probably in the mid-2000s, after my first book came out and I was looking to do a second book, and I reached out to all these traders in early 2005, people like David Harding and Larry Height, and I reached out to Willowbridge. And I can't remember who I talked to. There seemed to be several partners, several chief guys, so to speak. There might have been one main, I'm not sure. But I know that day I ended up speaking with somebody at Willowbridge who was high on the food chain. And it was the most interesting conversation because we sat and we had such an open conversation all about trend following and about many of the things that I had written about in my first book and how he agreed and everything. And then I was like, okay, let's do an interview. He's like, oh no, we're not talking on the record. It was so interesting because it was, at the time, they were and like I said, I don't know where they stand today, but at the time they were, I think, multi-billion. So it was so interesting that I was just having this casual conversation with somebody, such a super successful firm, and I could not quote them. So,
In fact, I would think it'd be the other way around with Monroe and the low profile that Monroe had compared to Willowbridge. That's surprising to me.
in terms of profile, Monroe had the Market Wizards chapter and not much else. I mean, he kind of very smartly left that as like, and I don't know how many other interviews have there been with him. Not many,
I don't know if there are many.
if any.
I spoke to him every night when the markets were really busy. I like to stay from the Asia Open to the U.S. Open because it was so exciting to watch how Asia affected Europe and how that affected the U.S. And I would talk to him, on those random days where I would log 14 or 16 hours. But absent of talking to him every day and the occasional holiday party, he kept to himself. He's just one of those people that knows what needs to be done, does it, and moves on. As far as I know, he left the business in, I believe, somewhere around 2000.
Let me keep you at Willowbridge for a moment. Why don't you explain, because I don't know if you left Trout and went directly to Willowbridge. Why don't you kind of like give the audience an understanding? I use the name Willowbridge. Most people probably don't know anything about that particular firm. And maybe after explaining a little, what was one of the big takeaways you took from working with them?
Yeah, I went from Trout to Willowbridge. Fortunately, Willowbridge was in New Jersey, so that made the Bermuda back to the States, made that transition easier. Willowbridge was more of a global macro discretionary trading operation. They did have systems in place, but what I was able to do is really research what was making the markets move. So I alluded to earlier with Monroe, I was able to, work the Pacific Rim markets, but it became very clear that there were relationships between the Pacific Rim markets, the European markets, and the U.S. markets, being the global relay race that I alluded to earlier. So there I ran short-term systems, did research, and tried to add value on a daily basis, because and I'm not sure if Willowbridge would be deemed a trend follower, but the more global macro discretionary approach they had, if there was a long, say, euro position that the firm was carrying, if I could identify weakness in the euro on a daily basis, obviously losing less on that position, making more over time, then there was that value add. That experience enabled me to really do a deeper dive into all of the asset classes in every time zone, which inevitably helped me with the confidence to go out on my own in 2008 and start trading the S&P programs that we now offer.
Let me keep you at something that you've talked about multiple times in this conversation so far, which is the Pacific Rim and time zones. I actually can relate a lot to what you're saying, and I think we're going to share the same view about this. But I really enjoy being ahead of America right now. I enjoy it. I really enjoy, because like you said, you can do your whole day. If you're in Asia, you have your whole day. You can see everything, what's going on. And then you can kind of like, you don't have to stay up that late really to see the start of America. Okay, and obviously if you're crazy, you don't go to sleep, but I don't have that problem. I like to sleep. But it's kind of, there's something very interesting and different to be ahead of America, isn't there?
Going back to Monroe was the best experience of my professional career. It's funny, before I hired Tom in late 2017, I didn't know what to do. I had spent all this time trading and research and developing, and I thought it was always in my marketing brain, like, it's great. I'm just going to go tell people how different we are and how different 3D Capital is. I mean, the sun rises in the east and it sets in the west. Going back to Monroe, it's logical. It makes sense. You start saying that to people and they're like, what are you talking about? They don't know, right? Because I think our edge is, I spent the first 6 years of my career working at night, and it became very clear that those markets, well, for like common sense, they're the first markets that open in the world, right? Australia, New Zealand, Japan, Hong Kong, Korea, Taiwan, China. Those markets are where the trade day begins. And they certainly provide a lot of value information into what can happen in the US. So it just made perfect sense. And for the life of me, I can't stop looking at the markets in Asia. I mean, it's where I started. I just, I do it when I go home. I do it before I go to bed. I do it when I wake up in the middle of the night. It's just one of those things where it's an important piece of the puzzle. That's where I learned, and it's something that's always stuck with me.
Let's also lay down something about Asian markets too. If anything, if one wants to take the little bit of a crystal ball out and put it on the table and say to yourself, where will market expansion in the not too distant future just keep going up and up and up? It's going to be Asia. When you see on the ground a Tokyo, a Beijing, a Shanghai, a Bangkok, a Ho Chi Minh City, a Singapore, a Kuala Lumpur, when you see those places on the ground, and I know there are plenty of Americans listening right now that just lost track of what I've said, have never been to any of those places, and don't necessarily have an appreciation. But my gosh, even if you never go, you can start to imagine by looking at the market growth. I just think you've probably got a little bit of a secret weapon on your side there, that you did start with that perspective, because I think I've saw a stat recently. If you look at the middle class growth of America and Europe compared to Asia in the next 20 years, it's going to be 100% middle class growth in Asia across almost every country, and literally no middle class growth in America or Europe. I mean, basically all the action is going to be in Asia. And who knows, maybe it'll reach an acceleration point where it's the biggest thing. Who knows?
Going back to Monroe, I remember the importance of Monroe wanting to get into the other markets to be able to take advantage of that growth, right? So Korea, when we were in Bermuda, was an important market for us to get into, and just as I'm sure China is now. So the growth is there, and all the better if you can get in early, because I think the earlier you're in a market, the more immature the market is, and the easier it likely is to make money and be profitable. So there are certainly advantages to getting into markets early before everybody is there and it's a crowded trade, so to speak.
As we wind down, I want to ask one last Monroe question, something that I've seen you quoted on. I believe it was a baseball analogy, staying awake to the ninth inning, 2 outs, and being ready. Why don't you explain that? It's a great story.
One of the analogies he gave me is you always have to be ready. You always have to be prepared. Now, yes, you're trading a system, but the system only works if you implement it with relentless persistence. You can't take a day off, or something like December 24th or December 26th of last year is going to happen, or October 3rd, whatever the day may be. So his analogy was, Eric, you could be sitting in right field and not have a ball hit to you for 8 2/3 innings, but you better have your glove ready, because you'll have a line drive come screaming at your head, and you better be ready to catch that ball, or you're going to be knocked out. I'm glad you brought that up, because that's another thing that's always stuck with me. That has been ingrained to me probably more than anything else, because when I went out on this venture to start 3D Capital, I started in January of 2008. I haven't missed a trade day since I launched the firm. So that's about 11 years of trading without missing a trade day. And I do it because I understand the importance of the implementation of the system. And I love doing it. It's a two-headed monster, so to speak. The implementation and always being prepared is something for me that has always stuck with me. In fact, we were in a meeting, Michael, and somebody said, well, Eric, it's a system. If it's a system, it can just run itself. And, without hesitating, I said, yeah, I have a 6-year-old, and I take him to the playground. I know he's safe and I know he's good, but I'm not going to leave him. I'm going to stay there and make sure everything works out okay, and then he's going to be safe. It's almost the same thing with 3D systems, just being here and monitoring them. And that's how you learn too. Being in front of a screen for as long as I had has enabled me to, understand what's moving the global markets, and most importantly, the S&P 500.
There's always a little bit of luck in life. Meeting interesting people can happen at times you never expect. And I'm sure some people might be listening and saying, oh, this guy, Eric, his first Wall Street job was working for Monroe Trout. Everything was easy breezy. But I think that's really the wrong way to look at it, though, because everyone, if they've got their eyes wide open, it's not about saying, hold on, Eric did this or Eric had that opportunity or Mike had this opportunity or whatever. It's not about that, because everyone's facing a different situation and everyone's got something that they can go play off. There's somebody they can meet. And if they don't know anybody, they can start knocking on doors and not just sending a damn email, but figuring out a way to get in front of the person that can help you. And you know what? The key there is not necessarily, and you've demonstrated this on this call, it's not a matter of whether they can help you when you meet them. It's what can you do for them? What can you learn? What value can you give them? And then learn by osmosis over time. And then the next thing you know, 25 years later, you can say, oh my gosh, I'm running my own firm now, and I had a chance to be mentored by this really interesting guy featured in Market Wizards. That's kind of how life unfolds, huh?
Yeah, absolutely agree. And when you're in it, you don't even know. But when you look back, it's like, wow, I was very fortunate to learn from one of the best and be mentored by one of the best. I mean, he's known as like the Cal Ripken of hedge funds, but nobody knows about him, Michael. I mean, in today's day and age, you start talking to people, a lot of people don't even know Monroe Trout. Right? I mean, that was almost 20 years ago.
His choice.
Yeah.
Eric, where can we send people? Where is the best website for people to go and check you out, find out what you're up to, reach out, connect? Where would you like them to go?
They can go to our website, 3dcapitalmanagement.com, or they could email. We're on LinkedIn. We do some stuff on Twitter, or give us a call. We'd love to be able to talk about how we can help add value. Because in the end, that's what we're all trying to do, right? Everybody, at least you would think, is trying to help and add value.
Eric, thank you for taking the time today.
Michael, thank you, and congratulations on your success.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash, or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.